This questioner intends to put $1,000 yearly into my 4-year-old daughter's education fund. Where should I put it? Invested, one. The other just covers everybody else. What are some of your current market favorites and why?
Well, on the first one, and this is important whether you're investing for a 4-year-old, a 14-year-old, or a 74-year-old. You have to say, what am I going to do when the market goes down? Because I've had audiences like this, larger audiences, and I'll say, how many people in the room are short-term investors? I've never had anybody ever raise their hand. I mean, everybody in the world is a long-term investor until the market goes down. And like in 90, I remember 1990. 1990 was so much scarier than 87. 87, the market just fell down, and you call up companies that our business is terrific. We're about to announce a stock buyback, or we're already buying back our stock. Business is great, and we can't figure this out. But in 1990, you had Kuwait invaded. You had the banking system really on the ropes. I mean, really close. You called up a company and said the business was slowing down. We sent 500,000 troops to Saudi, and we were about to fight what people thought was the, remember this, it was the 4th largest army in the world, and they were the toughest army in the world, and this was going to be a terrible war, and that we ought to sit them out. Remember the theory, the big theory, there's a lot of people in this city saying, we had to wait them out. You know, we'd still be waiting there at 120 degrees with our 500,000 people. I mean, I think Bush made an incredibly brave decision on the information he was getting to go in there and knock them out, or we'd still be there. But that was an ugly time, and that was very scary. And the public stood, some people learned from 87, and they stood throughout that and said, I'm confident about the next 5, 10, 15 years for this country, and they hung in there. So I would say if you want to buy a small growth fund, or you want to buy a balanced fund that's part bonds and part stocks, you put so much money in, put more in every year, you'll be very pleased in 10, 20, 30 years. Stocks will beat the hell out of money markets. They can beat the hell out of bonds. No group of, you think of it, any corporations, McDonald's, any of these great companies, Marriott, you name it, they've never got together and said, geez, you know, we're really doing well. Why don't we raise the coupon on our bonds? So, you know, those bondholders have been really loyal. We've been given 8%. Why don't we raise it to 9? You know.